Aren't we forgetting the third leg of this, which is debt overhang? I mean, demographics, technology, and excess debt. Excess
Oh,
debt is the one we haven't yet touched on. So, Vincent, maybe you can touch upon that a little bit, and also add in the fact that Japan has all these issues, but we haven't yet seen that pickup in inflation that you have suggested that aging populations will eventually inflect towards.
yeah, yeah. No, good point. On the debt, I've been kind of in the MMT camp for a while. That the debt problem is mostly a matter of writing down assets more than an actual threat. I mean, roughly speaking, I would say we had this big accumulation of private debts between 2000 to 2008, real estate in the US, some corporate debt in Europe, etc., emerging markets, dollar debt, whatever. Then we got to a point where growth was not sufficient to support this debt accumulation in 2008. And in various ways, we ended up nationalizing it, transferring it from private balance sheet to public sector balance sheet. Now, in Europe, that gave us a sovereign debt crisis because we forgot the next part of the plumbing, which is you move it to in the US, we couldn't get a sovereign debt crisis because, the US dollar is a reserve asset. The next step, of course, once it's on the government balance sheet, is you extinguish it with QE. So until there's a gap in Europe between the time we nationalized the debt and we started monetizing it, and that's when we had a sovereign debt crisis. But if we had done the two at the same time, we would have avoided it because, and Japan, for example, never had any issue because the debt is effectively owned by the BOJ. I think they own close to 100% of GDP. Now, take the example of Japan, when the BOJ owns a JGB, it still pays the coupon. I mean, very low because it's low, right? So technically, that's money that flows from the Japanese treasury to the Bank of Japan. But then by statute, the Bank of Japan has to turn over any profit it makes back to the U.S. Treasury, back to the Japanese Treasury, or same thing between the Fed and the U.S. Treasury. So effectively, that debt exists on an accounting entry. Its money goes from the right pocket to the left pocket back to the right. But I think when we speak about debt, we need to take away the central bank balance sheets, because that represent, it's almost like the Townsville that you have in the bottom of the throat. Like it's a legacy thing that doesn't serve any purpose. So I view the world as much less indebted, the true debt load as much less, and I think that decade of QE, that was its purpose. So if I were the way we'll deal with the debt, it's a long cycle. Debt cycles are very long, right? We built debt for 40 years, then we nationalized it, then we monetized it, and the next step is we inflate it, and then we'll end up to a point, I think, by the end of the 2020s, when we'll have extremely low debt to GDP ratios, the same way it was after the 70s in the US, and then we can start the whole thing again.
So from what I'm understanding, I mean, US right now seems to have a much lower consumer debt than we did prior to 2008.
Yes.
This idea from a government perspective of one man's debt is another man's asset doesn't really matter because it's the same government. So that part of the debt can be, if they wanted to have a debt jubilee.
Consolidated, yeah.
And so the combination of those two things, if that were to happen today, what we'd see is a much lower debt burden than what the headline tells us.